Hi there. I'm a forensic equity analyst with Optivest. Our whole mission is to protect retail shareholders here in Sri Lanka, not with opinions, but with cold, hard data. Today, we're going to tear down a really fascinating case that proves why, as an investor, you have to learn to question everything.
All right, let's start with a financial riddle. So picture this. There's a public company, a hotel. The stock market, all the buyers and sellers, collectively decides that the whole thing, the building, the brand, all of it, is worth about 2.5 billion rupees. Okay? That's our starting point. But this is where the story starts to get a little weird.
Because inside that very same company is this number. Over 5.3 billion rupees. And we're not talking about the value of its property or some vague asset. No, this is cash, cold, hard cash and investments. That's more than double what the market thinks the entire company is worth.
And that brings us to the core question of this entire investigation. It's a paradox that should make any investor just stop and think. Why on earth would the market look at a company holding 5.3 billion in cash and basically say, nah, we think the whole operation is only worth 2.5 billion? Let's dig in and find out.
Right. So this huge disconnect, this financial riddle, this is our core anomaly. It's the one thread that if we pull on it, will let us unravel the entire story behind this company. So first things first, what does this company actually do? Well, you'd think it runs a hotel, right? And it does. Its hotel operations brought in about 257 million rupees. But look at this. Its investment income, that's money from interest and dividends, was over 779 million. That's more than 3 times its supposed core business. This isn't just a hotel that invests on the side. This is an investment fund that just happens to own a hotel.
Now, what's really fascinating here is that this isn't my analysis. This is a direct quote from the chairman's own report. He's telling us, straight up, why the hotel business is struggling. The market in Colombo is just flooded with rooms, and everyone's cutting prices to survive. This explains why the hotel part of the business is so weak, but it makes what they're doing with their money even more important.
So where is all this cash exactly? Well, over 2.6 billion rupees are just sitting in fixed deposits. Another 1.2 billion is invested in blue-chip stocks. But here's the real kicker. When you dig through the financial reports, the company explicitly states it has no material capital commitments. They have no declared plans for this giant pile of money. No new hotels, no big upgrades. They're just holding it. So we've established the what. This is basically an investment fund in a hotel's clothing. And in any investigation, that naturally leads to the next big question, the who. Who is actually making these decisions? Well, this slide paints a very clear picture. The board of directors is an incredibly tight-knit family unit. You have the chairman and deputy chairman, who are the parents of 3 other directors on the very same board. Now, there's nothing inherently wrong with that, but as a minority shareholder, you have to understand that decision-making is highly, highly centralized within this one family. Okay, so what does this controlling family decide to do with the profits? Well, for every 37 rupees and change the company earned per share, only a tiny slice, about 10%, was actually paid out to shareholders in dividends. The other 90%, it was kept inside the company, just adding to that massive, ever-growing pile of cash. Now, you might see in their report that they proudly announced they doubled the dividend to 4 rupees. And on the surface, that sounds pretty generous. But context is everything. For a company sitting on a 5.3 billion rupee cash fortress with 0 plans to spend it, a 10% payout is, frankly, incredibly conservative. The cash just keeps piling up inside the walls. And this is where all the pieces of our puzzle really start to click into place. It brings us to the heart of our forensic analysis, connecting the dots between that tight family control and this ultra-conservative cash hoarding policy. Let's put some hard numbers to this disconnect we've been talking about. According to the latest financials, the net asset value, that's what the company literally owns per share in assets, is 1,746 rupees. But the market price, which you can buy it for, just 850 rupees. You are, in effect, buying 1,746 rupees of assets for only 850 rupees. That isn't just a small gap. That's a staggering 51% discount. The market is screaming at us that for every rupee of assets this company holds, it's only worth about 49 cents as long as it's in the hands of this particular management team.
This is the multi-billion rupee question that every single potential investor needs to be asking. Why this deep, deep skepticism? The assets are real. The cash is sitting in a bank. The stocks are real, quoted companies. So why is the market punishing the valuation so severely? And that leads us to the market's final verdict. Because you see, a stock's price isn't just about the value of its assets. It's about the market's confidence, or maybe lack of confidence, in what the people in charge are going to do with those assets. To really get inside the market's head, you need to understand a key idea: opportunity cost. That 5.3 billion rupees sitting in bank deposits and stocks isn't being used to grow the business, or buy out competitors, or innovate. It's earning a safe but pretty low return. The market sees all the potential for that cash to be used for something far more profitable, and it's penalizing the company for not doing it. So what's really scaring investors off here? Well, it's a mix of things. There's a real fear that with such tight family control and a history of low payouts, that cash is never, ever going to make its way back to minority shareholders. There's a concern that this super conservative management style means growth will always be limited. And honestly, the financial reports, while they tick the boxes, they lack the kind of detail and forward-looking vision that really builds investor trust. And here's the most important takeaway from all of this. The numbers themselves, they only tell you what is happening. A true forensic approach is about figuring out why. You have to learn to read the story that the numbers are trying to tell you. And you can apply this logic yourself. Here's a simple toolkit. 1. Find the anomaly, the thing that just doesn't quite add up. 2. Uncover the real business, not just the name on the door. 3. Map out who is really in control. And 4, most importantly, always question the market's verdict. Try to understand why it's applying a discount or a premium. And the great news is you don't have to do this all by yourself with a magnifying glass anymore. Modern AI tools can scan a 100-page annual report in seconds. They can instantly pull out key details you might miss, like Note 29 on related party transactions, or even more importantly, the absence of a note on future plans, which tells its own story. All of which leaves us with the one final question you have to ask yourself before you put your hard-earned money into any company. In a case like this, are you really investing in the hotel and its assets, or are you actually investing in the judgment, the strategy, and the shareholder friendliness of the family that controls it? The answer to that question is everything. Okay, before we finish up, just the standard reminder. This entire analysis is based on public data, and it's for educational purposes only. This is not financial advice, and here at Optivest, we do not have any position in this company. If you found this forensic breakdown useful, please share it with other investors you know. Because when one of us learns to ask the right questions, we all get stronger. Our whole mission at Optivest is to empower the retail investors of Sri Lanka. Stay curious,